today's video, we're gonna go over used leases and used auto loans and the difference between them. I personally went with the used lease because I wanted to keep my payments as low as possible. I saved about $180. I'm probably going to sell the car after 3 years anyway, and I want to keep my debt to income ratio as low as possible. And I also want to make my payments as low as possible across the board, right? That's my general consensus in general. I don't mind paying a little bit extra, more interest if needed, and that's the case for used leases. But we're going to get into it, so just follow me. Used auto leases are a way to basically pay the depreciation on a car. It works the same way with a small amount of differences compared to a regular brand new lease of a vehicle. Like, I'll get into some details. Not a lot of banks offer this, and it's really just like a credit union product. Credit union I went with was the Hanscom Federal Credit Union, which is here in Massachusetts. And the thing that I like about them is they just offer everything with the lowest rates possible, and it's worthwhile to be a member at a credit union. One of the things that's different about having a lease is this bank in particular, they put the title under your name. It's not under a leasing company. Like, for example, if you go with a Chevy vehicle, right, it's going to be under Ally Financial, one of their other companies. The other thing that I like about them is that they don't require security deposit, and you can pick the mileage that you think you're going to use throughout the year. So I picked, I believe, 12,000 miles for my vehicle because I do drive a decent amount, but you could pick 7,500 or 18,000. You're going to pay more for the 18,000, right? Because higher depreciation, higher usage of the vehicle. And then also no wear and tear penalties, which for normal wear and tear, right? So if you have an accident, return the car, yeah, you're going to pay for that. And you can use this for up to 5 years on a car. You can pay it off early. There's different ways to end the lease for this vehicle, and you can buy out the vehicle at the end of it. You can refinance the vehicle for the next 3-4 years and pay off whatever you owe, or you could just give it back and buy something else, because the car is now, for me, is going to be 7 years old, and for a BMW, that's old. So here's the Hanscom Federal Credit Union website. I went with a 48-month better than a lease loan, that's what they call it, and for my APR at the time was 7.24, so I pay a little bit more than what today's rate is, which is February 14, 2026. Here is my auto loan calculator, and I'm also going to show you my actual leasing document, right, just before I signed the document. So vehicle purchase price $32,000. I did a 48-month term lease, so better than a lease payment would be $600. But if I were to get an auto loan for this car, it would be $757. Now I pay way less than this because I traded in a car for about $10,000, but I also added the sales tax into the lease as well. If we go to the auto loan calculator, we'll see that we have $32,000 for the price. Loan term was 48. Let's put this 7.24%. And we'll see that overall our payment will be $770 per month, where my lease is $600. That's a savings of about $170 per month. Now, what you do end up paying more is on the interest. So typically it's about 1 point higher. So the typical loan would be 6.24%, and my lease is 7.24%. So it is going to be a little higher. So if you were to run the numbers for the total loan and the interest that I pay over the lifetime of 4 years versus the lease, I'm going to pay a little bit more on the lease itself. And then I also have to finance the vehicle for another 3 or 4 years if I wanted to pay it off. But I at least know what the payoff would be, which would be about $9,000 for me. And that's what I would need to finance or pay outright at the end. The difference between these two products is the auto loan, I'm paying the vehicle in full, and the lease, I'm just paying the depreciation for the vehicle. What I plan to do is when the vehicle is about to pay it off, I'm going to see the value of the car. If the car is below that, then I'm not going to keep the car. I'm just going to have them keep the car as is, and I just walk away. But if the car is worth like $12,000-$14,000 in the market, I'm going to buy the car for the $9,000 and then flip it and get some money on top, which is actually a little bonus. It would work out the same way if I got a loan, but in this case, I kind of have the option, which I like. Here's actually one of my statements that I have from the bank. As you can see, I pay $390 a month. That's my principal, and that's the ending balance that I have so far. And this is the last month. I paid $1,400 in interest last month, and it's about $112 of interest per month that I pay. So there you have it. That's the differences between a used lease and a used auto loan. I just chose to decrease my payment $170, right, if I didn't put a trade in, but I'm still saving the same amount because I put the trade in and reduced the total debt of the car. If you guys want to do that, I recommend Hanscom Credit Union. They're a great credit union, but look in your local area. You may find better rates, and they may have similar products for you, and it just makes it easier overall. If you're struggling to get financing or a lease for your vehicle, we also offer credit repair. You can click on the link below and sign up for a free consultation to see if we can help you or not. And then if you like the video, subscribe, Comment below. If you have any questions, feel free to put them here in the comments and I'll get back to you personally.